Hey everyone, this is Dimitri Pargamonik with MarketChameleon.com. In this video, I'm going to demonstrate how to find a call spread that has a high yield if the stock is flat at expiration. And the idea behind here is that if we look for call spreads, some call spreads will be already in the money. In other words, the stock price will be above your strike prices, and if the stock finishes there, you'll realize your maximum gain, and then you'll earn a yield on the risk that you took. So the idea is to find call spreads that are already in the money, and if the stock just finishes flat or goes higher, in other words, it doesn't really need to go higher, but if it finishes flat or goes higher, you will realize your max return. And here we see that this column here shows us what your return would be if the stock is flat. So obviously here Apple right now is $135.62. So if you buy a call spread that is the 141, 142 strike, that means that the stock has to go above 142 for you to realize your max gain. So this has a ways to go. But let's filter out ones where the stock is flat and it makes a pretty good return. So I'm going to use the filters above here, and let's look for expirations, anything that expires within the next 30 days. When you do that, the screener, call screener below, will reload, and it's going to show all the different types of call spreads that are available with expirations that have less than 30 days to expiration. And now I'm going to use this filter here, a minimum return if the stock is flat. And let's say we want to earn at least 20% return on the money we have at risk if the stock just sits there or goes higher. Okay, so we have less than 30 days to go. We want to get a pretty decent return, at least 20%, and the stock doesn't really have to do much. It has to either sit there or go higher. So let's take a look over here what it popped in. And here we see Apple. The stock's up $135.68. Here it shows us a call spread with a strike of buying the strike of 134 and selling the strike of 136, and the stock is 135.68. So here the stock has not gone up yet above the highest strike, but it is in the money because it's above your lower strike. And if you're paying $1.16 for it, like we have over here, then you're really paying below the price. If today the stock expired, it would be in the money by more than $1.16. And if that happened, if expiration was today, this is showing that you would make a 30% return on the money you have at risk. Okay, so in other words, you buy it for $1.16. If the stock finishes at 135.68, that's $1.68 in the money, giving you an 84 cents return. I'm sorry, not an 84 cents. That's your max gain. But this would give you a 52 cent return on $1.16 at risk. So you would earn 30% return. Now, of course, here Apple has a bunch of them that would earn over 30%. So let's do this. Let's find for each stock out there the best return if the stock is flat, meaning the highest one. And I'm going to come up over here, say show best only. I'm going to drop this down, and I'm going to say best return if stock is flat and at least 20%. So it has to be at least 20%. If not, it's not going to return it. But at least 20% or more, and show me the spread with the best return. So let's click on that. And now it's going to go in the market, filter it out, do the analysis, and it's going to give us the output. And here, Apple, over here, it's telling us the 134, 135 call spread. So you can see that's completely in the money. It's 62 cents. If the stock finishes above 135, and it's got like a week to go, then you're going to realize your max gain here, 38 cents. And that's a 61% return on the money at risk, right? So you're risking 62 cents. As long as Apple's above 135, this spread will be worth $1, giving you a 38-cent return on 62 cents at risk, 61% return, right? 61% here. Here's one for Microsoft. Here's one for Google. So really quickly, we could use the screener to get us the best call spreads based on these parameters. Hope you guys liked the video, and hopefully we'll see you in the next video. Bye, everyone.